Do you think the market will give them an opportunity? Last few days, the investors that we've been speaking to, Mark, are all saying, you know, we would like to buy this market, but on declines, but on dips, not at current levels, because it's run up quite a bit. Do you think that opportunity will be given by the market to them, 15%, 20% dip for them to re-enter, to deploy the cash that they're sitting on?
Yes, I think for some stocks this certainly will be the case. And as I mentioned, with this base building, you're going to have volatility. One day you'll have bad news come in, and then there'll be an opportunity to come back in again. So there doesn't have to be necessarily a rush. But I would say that, you know, people have got to be prepared to put some money in the markets, because currencies are not really the place you want to be now with interest rates coming down at the rate they are. Some emerging market bonds are quite interesting now. That would be another area. But I would say to be invested now is very, very important.
At some point this year, Mark, do you see the possibility of any kind of a buying panic for people who are not exposed adequately to equities as an asset class, or even commodities as an asset class, who've been very risk averse? Do you see that possibility at all?
Oh, definitely. There's definitely that possibility. The problem here that managers faced, including ourselves, was that in October and November, when we wanted to buy, we couldn't, because you had redemptions coming out of the funds. Net redemptions continued from October, November, December, and then a little bit in January. Now it's turned positive. But in the meantime, you've seen this move up in the market. So it's very difficult for money managers if they're having redemptions. And that's true across the board. Now it's changing, and you're getting a trickle of money coming in, but still, it's certainly not a normal situation that we would see where people really want to put money to work. So it's going to take time for this confidence to return.
Just want your thoughts on how much time it would take to go through this base building period. We've seen a few months of this kind of volatility within a channel, as you described. By when do you think we'll be done with spending time in this channel, the base would be built, and we could actually firmly start our way into the next bull market?
Well, it would be before the end. Yeah, I would say it would be before the end of this year. This process will have been completed, and then you'll have a move up. But we've got to be careful, because it may creep up on us, and then, you know, if you get big increases, 30, 40, 50, 60%, then things can no longer be cheap, particularly in view of the fact that earnings have slowed down in so many companies. So you've got to really take an opportunity when the prices are down.
True. But are you then saying, just to read between the lines, that 2010 calendar could actually be a bull market year for global equities?
I think it could very well be. With the amount of money that's floating around, that's in cash, definitely it could be another bull market run. You must remember, these days things move very quickly, with communications the way it is, and money movements the way they are. You could find a bull market upon us very, very soon.
What are you doing now, Mark, yourself, after this rally that you described as 20% in the US, in many markets 40, 50%? At current valuations, given earnings, are you taking some profits off the table, or are you remaining invested for much bigger gains during the year?
Still quite cheap. We're still finding stocks, most of the stocks we're finding, and in fact our portfolios have an average price-earnings ratio of less than 10, price-to-book value of less than 1.5, in many cases less than 1, dividend yield average of about 4%. So you can't say that this is expensive. It's quite reasonably priced. And that's the reason why we want to be fully invested. So any money we get in, we immediately put it to work.